Recent action by the U.S. Department of Labor gives employers an opportunity to expand auto-enrollment programs to disability insurance plans. I'm John Weber for AM Best TV. With us to discuss potential impacts on insurers in the long-term disability market are Kate Steffanelli, AM Best Senior Financial Analyst, and Christopher Lewis, an industry analyst. And Chris, what exactly does this action by the DOL do?
In essence, this action by the DOL essentially confirms and affirms a rule that allows employers to auto-enroll their employees in long-term disability insurance programs on an opt-out basis. For example, if an employer offers a comprehensive benefits package that includes long-term disability insurance and they want to increase the enrollment level of the employees working for them, they can auto-enroll these employees in the program without the employee affirmatively declaring it as part of their election period. Now, this has existed in some states already. However, some states have had restrictions on this and provisions preventing it. However, this action is on a national level, so it preempts all of those previous restrictions.
Kate, what are the benefits, direct and indirect, to insurers who write long-term disability?
Well, I know that the biggest challenge for our insurers has always been consumer awareness. The consumers really can't grasp what the detrimental impact of a disability might be on their financial situation. So we think that the auto-enrollment will really drive additional consumer engagement, and we've really seen a favorable impact of this with 401k opt-in. There will be multiple touch points where they'll reach the customer, for instance, at maybe 90, 60, and 30 days with some facts around disability. And it's really an opportunity for the consumer to kind of say, why don't I need coverage, then to determine why they would need coverage in a typical scenario.
Chris, will this development lead to a market shift in the workplace benefit dynamic?
It's very possible. Some states already have similar programs to this, and we found that states that have this auto-enrollment option for employers usually have higher market penetration rates for long-term disability than states who do not. Although it's a small sample size, it's difficult to tell whether this will, in fact, this trend will be present in every state in the nation now. However, we can anticipate some states will have similar results. As far as from a company perspective, this is most likely to affect large insurers who write more comprehensive benefits package, including long-term disability, and those who write policies on a national level outside of a particular state or region. It's also anticipated that now that there is a more probability or potential for covered lives, that marketing efforts by all companies across the industry will increase. From an individual policyholder perspective, the impact of this policy will be much more situational. For example, although many employees consider long-term disability to be a worthwhile benefit and understand the importance of income replacement, they also consider it a secondary benefit to things such as paid time off, sick leave, health, dental, and vision insurance. So if an employee's benefits package is not comprehensive enough to contain those things already, odds are that long-term disability coverage may not be a priority for them or their employers. However, for employees with more comprehensive benefit packages, there is a greater potential for increase. This also can serve as a mechanism to educate the masses and really increase levels of coverage, because more people will then learn the importance of why a long-term disability policy may be beneficial to them.
Kate, do you see any risks to long-term disability writers?
We really don't see anything too material in the near term. As Chris mentioned earlier, some of our carriers have already had this in place and they've been using the auto-enrollment opportunistically. It's typically, we see it with the larger cases where they have more intense HR touch points, and we may see some increases throughout the market as penetration rates increase. but then the spread will typically be across a greater population as well. So we'll continue to talk to our companies about how they're utilizing it, but we don't really see any material risks near term.
How have long-term disability insurers performed in recent years?
We've really seen an improvement in the profitability across the market, and we think that's driven by more favorable unemployment rates, as well as the carriers that are putting into place more intense absence management programs. We've seen intense competition in the market and some consolidation that's been causing some headwinds, and we've also seen that premium growth has trended a little bit below the employment rate. And we think that's a nod to the fact that consumers are still not where they need to be as far as engagement with disability insurance. And I think that the auto-enrollment will really become an opportunity for them to enhance consumer awareness.
Thanks, Kate. Chris?
Thank you.
You can find the full report online at ambest.com. And for AM Best TV, I'm John Weber.